So just a quick outline for what I'm going to cover. As I mentioned just briefly, I'm planning to do a little bit of a trip down memory lane with Boone and Aring, just a short, brief visit about how things went then. I think most of us know it. And then we're going to recap 2024, which certainly talk about some of our challenges and some of our successes. And then with how those successes have led to some pretty important outcomes now that we've already realized in 2025. And that has to do with the return to production at Atlas. We've had a drought, the drought's ended, and we're back into production and revenue. And then, of course, I'll finish with the work that we're doing on our Chapter 2 ambitions, which is about post-Atlas, and the idea that we have a lot of opportunities in front of us as a company. So the trip down memory lane on Boone and Aring has to do with just some of the highlights about why was the project successful. And the reason I'm doing this is also to draw a comparison to Atlas now that we've actually entered into production at Atlas. So the first thing is you see that the project was a relatively low capital cost project, and that's partly because we did use used equipment and made it work very, very well. It was a very high-grade deposit compared to most mineral sands projects at about 8%, and it was rich in zircon. So those combinations are one of the reasons that the value of the project was very high. It was an important project to us. But the important thing also, for those of you that may not know about mineral sands, is that the grain of the minerals is important to the success from a recovery standpoint and even later downstream separation and use of the products in industry. And this project was quite a coarse grain project, and it's one of the reasons that we were able to ramp up very quickly to nameplate capacity. Location was very important to us because it was located about 80 kilometers north of Perth, and the area had a decent population where we had enough people that could live and work in the area and go home every day. We didn't have to have a mining camp. And that's very attractive for mining workers not to have to stay at a mining camp. Some of the other reasons for success here on the right have to do with the fact that the project was built on time and on budget. But the more important factor was then we ramped up to nameplate capacity in only 2 months. Now, for those that may not be familiar with what does that mean relative to perhaps other projects, I'll tell you a quick story. We are quite an aggressive management team when we talk about budgeting and scheduling our projects. So for example, in our Boone and Aring project, some people called it naivety, but it really wasn't. We predicted we could get to nameplate capacity in 3 months. But we had to go to market and raise debt. And the debt provider said, no, that's not realistic at all. So he literally made us change our model to have 6 months to reach nameplate capacity, because that's the minimum that's considered normal in the mining industry. So we did. We modified our plan, and then we ramped up in only 2 months. So it goes to show that it's not really naivety. It's about a team that has their finger on the pulse of how to do projects. Many people said we got lucky, and so we took that with a grain of salt and said, okay, yes, we did. We're a lucky group. But as I go through Atlas's startup, I think you'll see it's probably a little more than just luck. But let's leave it there for now. These were the successes for Boone and Aring. And then recapping some of the highlights of the production itself, it allowed Image to become a credible developer and an operator, without a doubt. I think the project was successful on all fronts as far as I'm concerned. And there's going to be some downside I'm going to show you about that we didn't quite make, but nonetheless, to start out with, we constructed it very quickly in less than 6 months back in 2018, and then operated it successfully and profitably from 2019 through about the third quarter 2023, which was pretty much according to schedule. We produced, again, these are just minor little numbers, but there's reasons to talk about them, about 1.2 million tons of heavy mineral concentrate, and I'll come back to what is heavy mineral concentrate in a second. But it contained about 370,000 tons of zircon. And the reason I point that out is because the zircon, amongst the ilmenite and rutile and the monazite, the other products that are in the concentrate, the zircon is the value product. And I will make the next line first, and then I'll come back to zircon. We generated just under $800 million of revenue during that 4.5 year period, a reasonable EBITDA and some very good profit. And we repaid our debt early. We had a $50 million Aussie debt package that we had to pay back. We paid it back early. And we ended up paying a dividend to shareholders 2 years in a row back in 21 and 22. So it was all successful there. The other thing we did is we acquired 2 big properties during the 2022 year, one called Iniaba and one called McCall's. I'll talk about those a little bit in another slide, but we spent a lot of cash to acquire those properties, and it really bolstered our future propositions. We ended the year with $46 million in cash at the end of 2023, so that's what started our cash balance for 2024, which is what I'll be talking about in a little bit. The strategy that we used when we started Boone & Aring as a company and as a management team and building, transitioning from effectively being an advanced explorer to being an operator, a miner, was called, today I call it Chapter 1. Back then it was just what our strategy was, but I'll show you why I call it Chapter 1 today, because we now are going to be transitioning to Chapter 2. But it was about building and operating Boone & Aring profitably and on time and on budget, all those things, and we did that. To self-fund the relocation of the mining and processing equipment to Atlas. And I'll talk a little bit more about that in the next slides. And then to build and operate Atlas profitably, and then, in other words, to operate these mines in series, one after another. So the idea of Chapter 1 is about a simple business strategy. It's one mine at a time, one product, which is just a heavy mineral concentrate, and then one customer, it turned out in this case, which was in China. So the simple model allowed us to move quickly into generating profit. This is the key. But what I am going to show you here is that, yes, we did have a couple of setbacks in our overall Boone & Aring operational days. The first one is, if those of you who might remember our ambitions at the time, is we were very confident that we'd be able to extend the mining life at Boone & Aring with additional high grade that we had indicators of. But unfortunately, while we identified that mineralization, and it's real, for a few more kilometers, by the way, to the north of where we had to stop mining, it is underneath the Brand Highway and 2 high-pressure gas pipelines. So it just wasn't viable to be able to open that up. So we had to stick with the original plan that we had in our 2017 feasibility study and stop with the reserves that we had identified prior to the extension capability. It was disappointing, but it wasn't due to lack of effort. It was due to the practicality of other infrastructure that's, I remember making comments in the early days to shareholders that at Boone & Aring, we have a lot of infrastructure. And it turns out, based on what I just said here about this mineralization under the road, is we had too much infrastructure, encroaching on mineralization. There is such a thing as to have too much. The other thing, of course, that was a setback was the Atlas permitting delays. And most of you will probably remember that, or maybe not, but let me remind you, in 2017, our plan was to, as I said, operate Boone & Aring and then pick up the equipment and move to Atlas and keep going. And we had outlined a short period of time where we would be out of production 3 to 4 months. But that was predicated on the idea that the permitting for Atlas would be early and that we would start a lot of the infrastructure construction early, but while we were still operating at Boone & Aring. And then when we finished operating, all we had left to do is pick up the equipment and move it to Atlas and set it in and plug and go. So that's why it was only a 3 to 4 month window. The setback came due to delays in the permitting, which we had never thought would actually happen. And I want to talk a little bit about those. There were 3 primary drivers that triggered together to cause these delays, which, as you'll see at the bottom, was nearly 15 months of total delay. The first was that the area is in Banksia woodlands, and there have been, and back in 2018, the Biodiversity Conservation Act came in and some various regulations along with it. that in 20 and 21 really came into being enforced and deciding by the regulators how to even enforce them. And it took a little bit of time, and it created delays in how to get the permits to us on Atlas. That was the first thing that happened, and that actually carried right through to the very end. These were still some of the issues that had to be settled at the very end when we got permits approved in 2024. The other was the adoption of the Western Australian Aboriginal Heritage Act. Many people know about that here, of course. It did not work. It was rescinded. But in fact, because it was on foot to be released and then was released, it created such uncertainty amongst the native title holders and companies that we just couldn't get surveys done to clear the land to finish the permitting. So this is another very important part that acted in to cause the delays. It's not something we could overly control. And then the last one was that the EPA, the Western Australian EPA, actually advised us that they would not able to keep up with the workload and there would be delays in permitting. They even restricted each company to only one project at a time because they just didn't have the manpower. Some of that was related to the post-COVID employment issues that we all saw. But nonetheless, these three things together created a situation where we were delayed by 15 months on the permitting for Atlas, a big setback. So when we look now at 2024, I'm breaking this into two categories because the challenges were absolutely clear. The first being, of course, with no mining and no production, we had no sales, no revenue, and that zero revenue for that whole year made it very challenging, obviously. You recall, of course, we did end up or start the year with $46 million in cash. So apologies, I'm going ahead of myself here. The year was a transition year. And what we did enact was a cash conservation protocol to ensure that we had enough cash to indeed construct Atlas, just as was originally envisioned back in 2017. And in fact, we were successful in that, but let's talk that next. The other very big challenge happened in November of 2024 when the massive bushfire that started south of the project and then across the week and a half went right through the property. And God, I was thinking for a while, this project's just not meant to happen, is it? Right? Can't get the permits, and now we're getting a bit of a firestorm. I can say to you that that fire went right to our front door and all around us. But thanks to a dedicated team of people that volunteered to stay on site and battle that because they had firefighting experience. And of course, with the help of the DES, the emergency services, we were able to protect both the mining camp and most all of our resources there at the construction site. We did have a little bit of a wind turnaround after it burned through, and it came back and got a little bit of our equipment, but it was all minor. So we preserved, but the challenge was really there. So it got scorched. All of that wonderful Banksia woodland that we all care about did get delayed a little bit for a few years due to the fire. Now, the successes, though, coming out of our challenges, if you will, and the fact of how we handled them is that firstly, we did finally get through and got our permitting done. I don't think there was ever a time when we thought it wouldn't happen. It was just a question of when. And this turned out to finally be received in August of 2024. Again, 15 months longer than we would have thought it should have been. Never saw that coming. So indeed, a successful thing was that we did get to conserve our cash to be able to construct Atlas as we had originally planned. That was very, very positive, and it's due to an extremely good team. Then we went through, in fact, and once we got the permits, and we did what we did at Boonenaring. We massively and rapidly, but safely, constructed the plant very, very quickly, as you'll see by the numbers here in a bit, in a very short period of time. But by the end of 2024, it was effectively 85% complete. And the last thing we did as a success for 2024 is that we did secure some working capital. So in other words, we had enough cash to get the thing built, but because of those long delays, we were running short on the money to actually have as working capital once it started into operation at Atlas. And we raised $20 million US in the fourth quarter, in the December quarter. And we did that through our off-takers. It's called a prepayment facility. In other words, this isn't an actual classical debt instrument. In fact, it's a much less onerous type of a debt facility. It's not secured by any of the assets. So in other words, that still keeps us available to start looking at debt for our next project on a formal basis, because we haven't hindered any of our assets. So that was a very good thing. We've had a long relationship with our off-taker, and that's the kind of trust and cooperation that when you build it and build it right, can work very, very positively for our advantage. And the last one is that we did complete one feasibility, a very important one for our Yandanuka project, because as you'll see coming up, that's our next target. And our ambitions, and remember, we are quite ambitious, and that is to build that project before we finish operating it at Atlas. So I'll talk a little bit about that. Now the physicals on Atlas, this is a picture of the mining camp. It was built in just over 6 weeks, believe it or not. Amazing effort by the construction crew. And I'm going to come back to that a little bit. And this is the thing where the fire encroached on, I think, all 4 sides at the end of the day. And yet it was preserved because of the good work by that volunteer team. And then, of course, the wet concentration plant, which was largely relocated from our Boone and Aring project. What I'm showing here in this top bullet, of course, is a thing called a CT1 spirals by Mineral Technology. I want to make a comment that Image is always looking or regularly looking at new innovative equipment and engineering. And when we ran across this particular item called CT1 spirals by Mineral Technology, we recognize it as a potential game changer for the mineral sands industry in some instances. And so what this is about is that I'll share just an analogy of the kind of spirals, which is just a big long stack of fiberglass troughs. It typically is about a meter, a little bit more than a meter wide diameter, because they're round and they're very tall. The CT1 technology shrinks that to about 250 mils, and yet it does the same amount of tonnage. That shrinking of the diameter of that primary separator allows the whole WCP, the plant, to be very small. That's why this one looks so small. It looks like a big pilot plant. And the reason that's important for Image is because we've got a couple of projects in our future that will likely be dredge mining projects. And therefore, the smaller the plant that has to separate it, the smaller the floating barges that are needed to float the plant behind the dredge. So it's a very much a game changer. And indeed, when we started up here at Atlas, as when we tested it at Boone and Aring in a pilot stage, it worked out very, very well. And I want to just put another picture up just to kind of draw in a little bit. The CT1s are those that you're seeing in the middle, and then to the right are called the cleaner columns. Now, the reason I'm doing that is because when I talked about the original rougher being this big, well, they're in normal space. Then the cleaners come in and they're a bit smaller. And that's what you're seeing to the right there. But you can see how much smaller still now these rougher columns are. So it's a massive change in the technology. But the bad news was that after about 2 weeks of really good operations when we started the project this year at Atlas, we started seeing some root matter from the deposit, because we got a very shallow deposit. It's basically from surface, starting to hang up in some of these little things. And so we had to clean them very regularly. We lost recovery for a little while. And I can tell you the short story is we've already now pulled them back out and put standard columns back in, because we had a backup plan ready to go just in case. In other words, anytime you do take a risk and test new technology, and let me be clear, this is the first process, the first company to commercially use this technology, commercially. So we took that risk, and we found out that in the scheme of things under accumulated flow, it didn't quite work out for this deposit. So we've already initiated our backup plan and pulled them out, and in about 3 days we were back online with columns that aren't susceptible to this root matter. We have announced all of this, but it's out there. But it was a very good thing. And now we're back on without them, and they'll be waiting for our next project, possibly Andanuga, but possibly the next one after that called Bitamina, which is a deeper, cleaner deposit, no root matter in it. Commissioning and startup. The picture here is of the very first HMC that was generated in February as part of our commissioning efforts, which started in very early February. So once again, the successes of 2024 only required us to, for the month of January, to finish up the critical construction we needed to start into commissioning. That was a very fast ramp up into commissioning. So that's what happened then, and already then in March, we were starting to ship our heavy mineral concentrate to the port for storage. We declared start of operations on April 1, and the first HMC shipment happened on 10 April. And I make a point here that the overall development timeline was similar to the Bunanaring timeline, as you've just heard it. Very short, very fast, very low cost, and successful. So I want to point out one fellow in the room that is almost never in a room when I'm doing a presentation, but he is today, and that's our COO, Todd Colton. Todd, can you stand up? Todd's done the work at Bunanaring from the beginning back in 2018 and then led the operations, and he's done the same thing at Atlas. And you, for the most part, the same team of constructors and operators, and we have a solid team of operators as well, and so we're very, very happy with those results. So for shareholders, I just couldn't imagine a better team to get these kind of projects done. Now I'm going to switch and start to set the stage for looking forward, and that's beyond Atlas and talking about 2025 and beyond. And I'll start by reminding you that our tenements on mineral sands, right, are all here in Western Australia. And you can see the little colored up and down streaks there. I'm going to expand on that in a little bit, but just know that we're here in Western Australia. But what is one thing interesting is as I was preparing the presentation this time, I realized I have never really pointed out anything to shareholders about the second part of our portfolio, which is some gold tenements. You'll see there Kalgoorlie, and you'll see in the expanded region here now a box that shows from Kalgoorlie and then down to the southeast. You see the green area. Those are image tenements. We've had them in our portfolio for quite a long time. We did a little bit of work on them a few years ago when we had cash, but always we've made it very clear that this is not our priority. Our priority is mineral sands. That's what we're in the business to do. So we've always been very reluctant to spend a lot of money on them. We do own them 100%. But I'm happy to tell you that today we're actually drilling again. Now that we're back into some cash flow, the board was very anxious to take advantage of the fact that the gold price is so high and take a look and determine whether these have higher perspective than we've determined so far. So we'll just have to wait and see how this turns out, but at least I wanted to make sure it's understood that we are drilling. Now back to mineral sands and this little map that's now expanded for what we have. We talked about Bunanaring. It's now mined out, but this is for location as well as for introduction of some of these other projects. Of course, Atlas, see further north in that main stream, which was called our original package of tenements. And it is now, of course, operational. And we had our first shipment now in April. And by the way, that's the second thing, is that a ship's being loaded right now for the second shipment to be going out the door in the next couple of days out of Geraldton. So these projects were that 2017 bankable feasibility focus, right? First Bunanaring and then Atlas. Chapter 1. We had in our original portfolio another project called Bitamina that we completed a PFS on. It is still a very interesting project. It has about a 10-year mine life, and we'll talk about some numbers on it in a second. And we are preliminarily forecasting that we could look to do this potentially in the second half of 2028. In 2022, this is one of the packages of tenements that we acquired. You remember I said we spent cash on 2022. The interesting thing about this is that I spent 2021 and evaluating projects throughout Australia to see if there were things we would want to purchase. And I must have evaluated 15 different project areas from different places. And only when these came on the market did I say yes and recommended to the board that we acquire them, and we had to bid for them and we won. because they passed my model of what can work, just like Boone & Aring, just like Atlas, and these others that we have in our portfolio. And these showed me that these were worthwhile pursuing. After a full year, almost 18 months of looking at projects, these came up and we snatched them. And as you'll see in a second, one of these is already getting close to being a project that we're going to want to develop. But what's important is that this package tripled our total mineral resources in the ground. So for a small company, that's very important. That adds future perspective. In 2022, we also acquired the McCalls and Mendara Springs tenements, and you notice how close they are to Boone & Aring, and I'll come back to that in a second. But this set is massive. Suddenly now we have projects that can extend for 50 to 100 years if we get them into production. And they're right there in our backyard. So when that came up as an opportunity, again, it passed my modeling filter and we acquired them. As you can see, we'll see in a shortly, we have work to do on those. So this is a story of every company wants to have a big project, of course, long-term project. But in our case, we have it now, but we don't have to bet the farm. We can work on our smaller projects and slowly develop the big one. When you have only one big project and you have to spend every dollar you get on it, and it either works or it doesn't work, you're at a high risk. We're not in that position. So I'm hopeful that as we start to peel this onion, we can do it with a lot of cash flow instead of from debt or equity. The Andanuka project is one of those in the top part from that acquisition in 2022 that now is already front and center for us. And I'll tell you a couple of reasons why. Firstly, because it's a very reasonable project. But secondly, because unlike Atlas, and for that matter, unlike Bituminous, that are in Banksia woodlands, this project is in farmland, very active farmland. And so the sensitivity of environmental issues and heritage issues is much smaller. And so we see this one as a more rapid development than, say, Bituminous going forward. And we saw what happened with Atlas, how much longer it took than we originally thought. So we're focusing on Andanuka, and you see here we're targeting maybe the first half of 2027 for being in production. And internally, we're actually trying to do it faster than that, but we have to be realistic. But where we are on that one, because it is private land, is we're still negotiating access to get to be able to mine it, and we're making good progress. That last one is McCall's, and you see there preliminarily we're just targeting out to about 2030. So you got a project potentially coming in on 27, project coming in on 28, and another one then potentially in 2030. And those are the ones that would run for multi-decades. If I didn't mention it, actually it'll come back. I'll come back to those other two. So I mentioned Chapter 1 strategy, which was that simple model, one mine at a time. Chapter 2 came in after these acquisitions of additional properties. And then end of the growth, we're now talking about multiple mines operating simultaneously. We're talking about multiple products. So we are talking about going up the, downstream a bit and now starting to separate our HMC ourselves rather than sending it to China to be separated, and therefore opening up markets globally for multiple products. And I'll come back to it, but there's one other major reason we're going to be looking at separation, and that's because one of those products, called ilmenite, has a very strong possibility of being upgraded to a much higher grade product. Now, from the sustainability side of things in our overall strategy, of course, the key is the longer-term projects of 20-plus years. Every company wants those. Those are very important to building value for shareholders in the market. And then this idea of value adding, converting the ilmenite to synthetic rutile. I will talk more about that. It's a novel process that we have in our hands under provisional patent. So we will be focusing, as is always the case under sustainability issues, on reducing emissions and environmental impacts. And part of that new technology I'm going to tell you about for SR includes emissions reductions. And then obviously looking at where we are today with technology, things like new innovation and automation and robotics and AI. So when I think about McCall's, I think about the mine of the future, one that will be heavily embedded with AI and robotics potentially, but still we'll need people on the ground, no doubt about it. So Yandanuka's feasibility study, which we published in April of 24, here are the statistics. You can see that the capital costs are relatively low. We believe already, because we've used some of the equipment at Atlas, that if we do bring this project online before Atlas is completed, that capital figure probably will increase by another 22 million. But it still will have a reasonable payback. You can see the EBITDA is strong. You can see the number of years of mine life. You see, we had 5 years at Boonenang. We've only got 2 to 3 years at Atlas. Here we're starting to get a little bit more longevity with an 8-year project at Yandanuka. This is the one that's in farmland that we think will be quicker to permit and get up and running. Bitamina, which we published a pre-feasibility study in 2023, is a 10.5-year project at this point. Slightly larger in total amount of material that's going to be produced as HMC. A little bit higher capital because it's a greenfields project. We really can't use much of our existing equipment, save and except those CT1 columns that we already purchased and we now own and have. Reasonable payback on that capital, so this is still considered a very good project. And by the way, both of those two projects, Yandanuka and Bitamina, the numbers are assuming we're still just selling a concentrate. But you see, the key is that if we can start to separate, which is a value add aspect by itself, and make SR, there's an additional value adding to these overall economics. But we don't have those for today because we've got to demonstrate that first. Just a quick one on this idea of synthetic rutile, and I apologize, this is a very boring slide, to be honest, but I'm going to add some color. And I'll just tell you so that if you don't know what we're talking about, the four things on the left, ilmenite, leucoxene, and rutile are the kind of products that are in our HMC. The synthetic rutile is not. That's a synthetic product. And you see that the titanium grade, the TiO2 grade, and the ilmenite is somewhere around between 55 and 70, and in our case, it's generally about 60 to 62%, very good quality. Whereas rutile goes up above 95% TiO2 grade. And yet you also see that the mass of ilmenite, that's where all the mass is. It's mostly ilmenite. It's very little rutile. And the idea of converting ilmenite to synthetic rutile is increasing the TiO2 grade to 95 plus, and therefore increasing the value of that product by a factor of 3 or more. There is a mass loss, and that has to be factored in, but the economics of our modeling suggests that this is still a profitable venture. And in our case, our ambitions are also to include the iron as a byproduct, which currently in today's technology, that's not happening. It's being put into tailings ponds. Again, a lot of work to be done, but the ambition of our new process at least has an inkling of possibility of success, more than I'm probably letting on. This is just a snapshot for those that want to get it technical to know that we've already run the tests, including on the Bitamina ilmenite, and prove that yes, it does upgrade very nicely and at very high quality. Not all of the processes are the same as we've patented. There's a furnace here called a fluidized bed, which is fine, but the furnace we've patented in our process is a different type, which has had several other advantages. And lastly, maybe not lastly, but close, I'm going to just say that on this process, as I mentioned, we've got a provisional patent on it. It does use an alternative furnace, and there's a variety of advantages of this furnace. I'm not going to go through them all, but just know that we've selected it, and it's not exactly new technology, but it's one that has been a sleeper in the background, in my view, because it works so well and consistently, not so many people know about it. You know the story about the squeaky wheel gets the oil. Well, when you have a piece of equipment that operates and doesn't have a lot of problems, not so many people actually hear about it. So this is what we're planning to use in this particular process, and we're getting closer now to identifying a pilot unit that can be acquired and put into place. There is an idea of a second patent for this process, but we'll keep that on the back burner. There's a philosophy discussion going on about if you patent, then everybody knows what your secrets are. And if you just keep it as trade secrets internally, they don't need to know. So we're debating whether we'll actually go to a second patent on this one. Getting close to ending here, so apologies for the long drawn-out session, but I think it's important. What I've tried to do in this slide is just show a quick comparison between what I call the short-term nature and limited opportunities of Chapter 1, which is just those 2 projects, but in fact the long-term nature and the multiple project opportunity in the lower 3/4 of the screen under Chapter 2. So the projects I talked about, Yandanuka, Bitamina, mineral separation, and even the SR plants are all in here, and I've even ventured a possibility, and remember, this is just a preliminary conceptual development plan, but it shows how this could fit together to make Image a much larger company overall. This is just a snapshot of our corporate, where we are today. I think when I pulled this up at 30 April, we're about 9 cents, nearly $100 million market cap, and a couple of the other stats. That's for reading. There are books in the back for anybody who wants to take it, study anything. The last point is to mention, of course, we are paying attention to ESG initiatives. We filed our 23 report, and we're in the process of finalizing our 24 report now. But 23, we were still in that position of using the solar farm at Boone and Aring and generating about 25% of our electrical requirements. Now, this is here because it's a lead-in for me to remind you of one other thing. We spent capital at Boone and Aring, and that included roads, water, power, and there's an opportunity now for that, and we own the land, to use that property, the Boone and Aring project, for post-mining use of a very important asset. That's where we plan to operate a mineral separation plant and a synthetic rutile production facility if we get that lucky to demonstrate that it's economic. So in other words, and you remember from the map, it's located sort of in the middle of our assets. So it's very well situated, including for the long term with the McCall's project just up the north. By the way, that was only about 15 Ks away. So the idea is to build into a longer term company that's actually very centrally located next to the Brand Highway for the long term. And of course, the solar farm is there already. And the technology we're going to look to employ includes hydrogen. So we're looking at the solar farm to generate hydrogen to put into the process. That is it for me. Thank you very much. I'm just going to close with a few of our partners in the industry that have helped us build, including some of them at Boone and Aring, but also here at Atlas. Thank you very much.